You see it forming. The perfect setup. Everything aligns exactly as your trading strategy requires. The trend is crystal clear. The support level is solid. The entry point is textbook. Your three confirmation indicators are all aligned. This is the kind of setup trading books use as examples. Your cursor hovers over the buy button. You know you should take this trade. You've studied this exact pattern 1,000 times. You know how to execute it. Everything inside you says, take this trade now. But your mind creates a thought. What if this is a fake breakout? What if there's something I'm missing? What if this reverses right after I enter? You pause. You analyze again. You check the indicators one more time. Everything still confirms. The setup is still perfect. But now your mind has planted doubt. You wait for one more confirmation. The price moves slightly but then stalls. The perfect setup window closes. The opportunity passes. You missed it. And then something painful happens. 30 minutes later, the price moves exactly as the setup predicted. The trade that you analyzed correctly but didn't take runs perfectly to your planned profit target. You would have made $800, but you weren't in it. You watch the money you left on the table, and your mind tells you, see, you're not good at this. You can't even execute the trades you identify. You second-guess yourself too much. You're never going to succeed. This isn't a trading strategy problem. This isn't a market analysis problem. This is a mindset problem. Your mindset is creating thoughts that sabotage your execution of perfect setups. And this mindset flaw is costing you thousands of dollars. Not from bad trades, from missed good trades. Let me tell you about Yale, who discovered he was missing 61% of his perfect setups due to mindset flaws, and how he fixed them to finally execute the trades he identified. Yale had been trading for about 2 years when he decided to track something unusual. Not his actual trades, his missed trades. For 90 days, Yale documented every perfect setup that appeared. A perfect setup being one that met all 5 of his entry criteria: trend confirmation, support-resistance alignment, indicator confirmation, volume confirmation, and time confirmation. In 90 days, Yale identified 89 perfect setups. His trading strategy identified 89 opportunities that met all the criteria. But Yale only took 34 of those 89 perfect setups. He missed 55 perfect setups. That's 62% of perfect setups going untaken. Yale then did something painful. He calculated what would have happened if he'd taken all 89 perfect setups. Using his typical risk-reward ratio and his historical win rate on perfect setups, Yale calculated that all 89 perfect setups would have netted him approximately $16,800 in profits. But Yale only took 34 trades, which made him $6,200. His missed 55 perfect setups cost him $10,600 in foregone profits. But Yale realized the cost was even deeper. He studied his 55 missed perfect setups in detail, and he discovered that his mindset flaws followed patterns. Specific mindset issues caused him to miss specific types of setups.
The 5 mindset flaws that make you miss perfect setups. Yale's detailed analysis of his 55 missed perfect setups revealed that they weren't random misses. They fell into 5 distinct categories based on which mindset flaw was operating. Mindset flaw 1. The perfection trap. 18 of Yale's 55 missed setups were missed because of what Yale called the perfection trap. These were setups that met all his criteria, but Yale's mind would create thoughts like, what if it's not perfect enough? Or, what if I'm missing something? Yale would reanalyze the same setup multiple times. Each time, it still met all criteria. But Yale's mind would say things like, I need to be absolutely certain before entering, or this looks too good, there must be something wrong. This mindset flaw comes from perfectionism, the belief that you need absolute certainty before taking action, the belief that perfect setups are rare and you should only trade once-in-a-lifetime opportunities. But trading doesn't work that way. No setup is ever absolutely certain. Perfect setups appear regularly. By waiting for absolute certainty, Yale was waiting for something that doesn't exist. Mindset flaw 2. The imposter syndrome. 14 of Yale's 55 missed setups were missed because of imposter syndrome thinking. Yale would see a perfect setup and think things like, "I'm not good enough to trade this," or "Traders better than me would take this trade differently," or "I don't deserve to profit from this setup." This mindset flaw comes from deep insecurity, the belief that you're not actually a good trader, the belief that you're fooling yourself or fooling others, the belief that you don't deserve success. Yale would identify perfect setups, but then talk himself out of them by suggesting he wasn't skilled enough to execute them. His mind would say, "I'll take this when I'm better," or "I'm not ready for this level of trade yet." But Yale had been trading for 2 years. He'd studied thousands of charts. He documented his perfect setups carefully. He was ready. His mindset was lying to him. Mindset flaw 3. The analysis paralysis. 12 of Yale's 55 missed setups were missed due to analysis paralysis. These were setups where Yale would analyze them endlessly. He'd add more indicators. He'd check more time frames. He'd look for additional confirmations. The mindset behind this flaw is the belief that more analysis equals more certainty. The belief that if you just study a bit more, you'll know for sure whether to take the trade. But Yale already had 5 confirmations. He already had his criteria met. More analysis wasn't providing new information. It was just providing more reasons to hesitate. Yale's mind would say, "Let me just check one more thing," and by the time he'd checked that one more thing, the setup window had closed. Mindset flaw 4. The comparison trap. 11 of Yale's 55 missed setups were missed because of comparison thinking. Yale would see a perfect setup, but then compare it to other trades. "This isn't as clean as that perfect setup I took last week." Or, "Other traders probably see better setups than this." Or, "This is good but not perfect enough compared to my best trades." The mindset behind this flaw is the belief that you should only trade the absolute best setups. The belief that all perfect setups are equal and you should only take the ones that feel best. But in reality, perfect setups meeting your criteria should be traded. They don't need to be compared to other setups. They don't need to be ranked against each other. They just need to meet criteria. Mindset flaw 5. The timing doubt. The final 10 of Yale's 55 missed setups were missed because of timing doubt. Yale would see the setup forming and think, "It's too early to enter," or "I should wait for a better entry," or "The timing doesn't feel right yet." Even though Yale's strategy had specific entry rules and those rules were being met, his mind would create doubts about timing. His mind would say, "This is the right setup, but the wrong moment," or "Let me wait for a better price." By waiting for better timing or a better price, Yale would miss the entry window. The setup would move without him.
Why these mindset flaws are so powerful? Understanding that Yale's missed setups came from 5 specific mindset flaws was helpful. But understanding why these mindset flaws are so powerful revealed the deeper issue. These mindset flaws are powerful because they feel logical. They don't feel like fears or insecurities. They feel like intelligent caution. When your mind says, "I need to be absolutely certain before entering," it doesn't feel like fear. It feels like wisdom. It feels like prudence. It feels like good trading sense. But it's not. It's a mindset flaw that costs you money. These mindset flaws are also powerful because they're self-reinforcing. When you miss a perfect setup due to a mindset flaw, and that setup would have won, your mind stores that as evidence. "See, I was right to be cautious." But your mind doesn't store the thousands of perfect setups you did take that won. It only remembers the ones you missed that would have worked. These mindset flaws are powerful because they operate automatically. You don't consciously decide, I'm going to let perfection trap stop me from taking this trade. The thought appears in your mind automatically. It feels true. You act on it before you realize it's a mindset flaw. Another reason these mindset flaws are so powerful in trading is that the markets provide intermittent reinforcement. Sometimes, when you hesitate on a setup, it reverses immediately. This teaches your brain, hesitation protected me. But most of the time, the perfect setup still plays out exactly as expected. Your hesitation just cost you a profit, not a loss. This is harder to notice because the pain of a lost opportunity is less obvious than the pain of a realized loss. How these mindset flaws develop. Yale's research revealed that these 5 mindset flaws don't develop randomly. They develop through specific trading experiences and underlying beliefs. The perfection trap often develops when traders have taken trades that looked good but turned out to be losses. After several such experiences, the mind develops a belief, perfect setups don't exist. Or, if I'm confident about a setup, it probably means I'm missing something. This belief then creates the mindset flaw where you doubt perfect setups even when they meet all criteria. Imposter syndrome in trading often develops from early losses or from starting trading later in life or with less education than other traders. The mind develops a belief, I'm not as good as other traders, or I don't really understand what I'm doing. This belief then creates the mindset flaw where you doubt your own analysis and hesitate on perfect setups. Analysis paralysis often develops from a combination of perfectionism and fear. The mind develops a belief, if I just study more, I'll be certain, or more analysis reduces risk. This belief then creates the mindset flaw where you add more analysis trying to reach a certainty that doesn't exist. The comparison trap often develops from consuming too much trading content, seeing other traders' highlight reels, seeing cherry-picked winning trades. The mind develops a belief, other traders find better setups than I do, or my setups aren't good enough. This belief then creates the mindset flaw where you compare your setups to others instead of evaluating them objectively. Timing doubt often develops from taking early entries that reversed quickly or from missing early entries that worked out. The mind develops a belief, timing is more important than setup quality, or I'm bad at timing. This belief then creates the mindset flaw where you doubt your timing even when your entry rules are met.
The real cost of mindset flaws. Yale's calculation of $13,800 in missed profits in 90 days was substantial. But when he calculated the full cost of mindset flaws over his entire trading career, the number was shocking. If Yale had been missing 62% of perfect setups for 2 years, that meant he was missing approximately $54,400 annually. Over 2 years, that's over $100,000 in missed profits due to mindset flaws. But the full cost goes deeper. Cost 1. Actual missed profits. The direct cost of missed setups. $13,800 per 90 days equals $55,200 per year. Over 2 years, that's $110,400. Cost 2. Revenge trades from missing setups. After missing perfect setups, Yale would take weaker setups trying to recover psychologically. These revenge trades lost money. Over 2 years, approximately $13,600 in losses from revenge trades caused by missing perfect setups. Cost 3. Reduced confidence. Missing perfect setups destroys confidence. Yale would start doubting his analysis. He'd start second-guessing his criteria. This reduced confidence made him hesitate even more on future opportunities. The impact on future opportunities was cascading. Cost 4. Time and energy wasted. All the reanalysis, all the overthinking, all the internal conflict about whether to take setups. This wasted enormous amounts of mental energy that could have been used for actual trading or trading improvement. Cost 5. Opportunity cost. Yale's focus on whether to take setups instead of just taking them meant he wasn't improving his strategy.
He wasn't learning new patterns. He was stuck in analysis rather than execution. Cost 6. Psychological toll. The constant internal conflict about taking setups created stress. The repeated pattern of missing opportunities created frustration. The doubting of his own judgment created anxiety. These psychological impacts affected Yale's health and relationships. The full cost of Yale's mindset flaws wasn't just $110,400 in missed profits, it was $110,400 plus psychological damage, plus opportunity costs, plus quality of life impacts. How Yale fixed his mindset flaws? Once Yale identified his 5 mindset flaws, he developed specific interventions for each one, not generic fix your mindset advice. Specific, targeted solutions for each specific flaw. Fix 4. Perfection trap. The criteria lock. Yale created a simple rule. If a setup meets all 5 criteria, it's tradable. Period. No exceptions, no additional requirements. He would write down his 5 criteria before each trading day. Then when a setup appeared, he'd check each criterion. All 5 met? Trade it. Don't reanalyze, don't add new requirements, don't wait for more confirmation. This criteria lock prevented Yale's mind from adding new requirements that would never be satisfied. Fix 4. Imposter syndrome. The evidence review. Every Sunday, Yale would review his past 100 winning trades. He'd remind himself, these 100 wins prove I can identify good setups and execute them. I deserve to take these trades. He'd also review his strategy criteria and his analysis process. He'd remind himself, my criteria come from studying years of market data. My analysis process is sound. I'm qualified to trade. This evidence review countered the imposter syndrome thoughts by providing concrete proof that Yale's beliefs about his incompetence were false. Fix 4. Analysis paralysis. The time lock. Yale set a timer. He'd analyze a setup for exactly 5 minutes. When the timer went off, decision time. Either the setup met criteria, take it, or it didn't, skip it. No additional analysis allowed. This time lock prevented the endless loop of one more thing that characterized analysis paralysis. Fix 4. Comparison trap. The objective standard. Yale stopped comparing setups to each other. Instead, he had one objective standard. Does it meet my 5 criteria? All setups that met criteria were equal. Yale stopped ranking them as good or great or perfect. They were all just valid setups that meet criteria. This removed the temptation to comparison shop for the best setup. Fix 4. Timing doubt. The rule definition. Yale defined exactly when his entry rules were met. Not when it feels right, not when the timing seems good. Specific, objective rules. For example, entry is when price closes above the resistance level. Not entry is when price approaches and looks like it's breaking through. Clear, objective, measurable. This rule definition prevented Yale's mind from creating timing doubt about objective rules.
The implementation process. Yale didn't implement all 5 fixes at once. He implemented them one at a time over 5 weeks. Week 1 implemented the criteria lock. Result, Yale took 15 setups that week instead of his typical 8. His hesitation decreased dramatically. Week 2 added the evidence review. Result, Yale's imposter syndrome thoughts decreased. He felt more confident about his setups. Week 3 added the time lock. Result, Yale stopped reanalyzing setups repeatedly. His decision-making got faster. Week 4 implemented the objective standard. Result, Yale stopped comparing setups. He took setups that met criteria without worrying they weren't perfect enough. Week 5 defined his entry rules precisely. Result, Yale eliminated timing doubt. He took trades exactly when his rules said to take them. By the end of 5 weeks, Yale's missed setup rate dropped from 62% to 8%. He was now taking 92% of his perfect setups instead of 38%. The results. After implementing his mindset fluff fixes, Yale's trading results transformed. Before fixes, 90-day period. Perfect setups identified, 89. Perfect setups taken, 34, 38%. Profits from setups taken, $6,200. Profits from missed setups, $10,600. Revenge trades from missing setups, $3,400. Net result, $2,800. After fixes, 90-day period, perfect setups identified, 92. Perfect setups taken, 84, 91%. Profits from setups taken, $15,800. Revenge trades from missing setups, $200. Net result, $15,600. By fixing his mindset flaws, Yale went from a $2,800 profit to a $15,600 profit in the same time period. That's a 560% improvement in results just by fixing mindset flaws. But beyond the money, Yale's trading psychology transformed. He was no longer fighting himself on every setup. He was executing his plan. Trading became easier. Trading became more enjoyable. Trading became sustainable. How to identify your mindset flaws. Everyone has mindset flaws. The question is, what are yours? Step 1. Track missed setups. For the next 4 weeks, document every setup that meets your criteria that you don't take. Write down why you didn't take it. Step 2. Look for patterns. After 4 weeks, analyze your missed setups. Look for patterns in the reasons. Do you keep hesitating about the same types of things? Step 3. Categorize your flaws. Based on your patterns, which of the 5 mindset flaws do you have? Perfection trap, you doubt perfect setups. Imposter syndrome, you doubt your own ability. Analysis paralysis, you keep reanalyzing. Comparison trap, you compare setups to each other. Timing doubt, you doubt your timing rules. Most traders have a combination of these. Identify your top 3. Step 4. Implement your fixes. For your top 3 mindset flaws, implement the specific fix. Not all at once, 1 per week. Track how your missed setup rate changes. You should see dramatic improvement within 4 weeks. The bottom line, your mindset flaws are costing you money. Not from bad trades, from perfect setups you don't take because your mind creates doubt. Yale was missing 62% of his perfect setups due to 5 mindset flaws. Those missed setups cost him over $110,000 over 2 years, but he fixed his mindset flaws through targeted interventions. The perfect trap was fixed with a criteria lock. Imposter syndrome was fixed with evidence review. Analysis paralysis was fixed with a time lock. The comparison trap was fixed with an objective standard. Timing doubt was fixed with rule definition. These weren't generic mindset improvement tips. They were specific, targeted solutions for specific identified problems. You probably have mindset flaws too. You're probably missing perfect setups. The setups are there. Your strategy identifies them, but your mind creates doubt. The good news, mindset flaws are fixable, not through willpower, through identifying the specific flaw and implementing the specific fix. Track your missed setups, identify your patterns, categorize your flaws, implement your fixes. Within 4 weeks, your missed setup rate should drop dramatically. Your profits should increase significantly. Yale increased his profits by 560% just by fixing his mindset flaws. You can too. The question is, will you do the work? Will you track your missed setups? Will you identify your mindset flaws? Will you implement the fixes? Perfect setups are appearing. Your strategy is identifying them, but your mind is stopping you from trading them.